Da-na-na-na-na. Good intro song, hey? Welcome back to episode 30 of that live portfolio update where we're growing 50k into $1 million. Before we jump into this episode, we're just going to go through a few beers I need to hand out. So we got one for Mr. Dodd, our famous second year. One for Phantom, pleasure as always. One for Brent and Lisa, I hope you guys don't mind sharing. And one for the new guy, Maddie. But without further ado, let's jump on into it. Well guys, starting with the trades this week. Now as promised, once we have that 5k in the bank, we'll start moving into new positions on the race to 15 holdings. We moved into another bank, being Auswide Bank, ASX ticker, ABA. We entered in at an average price of $7.09. Now this was an interesting play. As you can see here, they are hugging a really steep sell line. And in this volatile market, it's only set at $7. So let's hold on to our bank checks and hope for the best. Alright, benchmark time. So how did STW fare this fortnight in comparison to our portfolio? Holy macaroni! We're down a whopping 5.08% in comparison to STW, which was only down 3.59%. Still huge. By memory, that was one of the biggest drops I have seen, but at the end of the day, I'm not fussed, as we have some nice rules to follow, and they are our friends in these times. You got a friend in me. So how did our stocks do this fortnight? Well, as you already know, we're down 5.08%. The worst performers being Aurelia, down 17%, IGL down 8%, and Michael down 6%. Our only gain was our new guys, being Challenger up 5.5%, and ABA up 0.5%. It was a pretty rough fortnight. So here's all the last week's buys, holds and sells. The ones that changed are as follows and why, but be warned, grab your pillows. So Ben moved from buy to hold as it closed below last month's close. Capral moved from buy to hold as it closed below last month's close. Champion moved from hold to buy with its recent uptick, but it's very volatile though. COG moved from buy to hold as it also closed below last month's close. Funny, as it was pretty flat for our fortnight. Now Clearview moved from buy to hold as it also closed below last month's close. These might change around a bit more next week if we have a bit of a better recovery from the market. Now it's pretty bleedy and stuff out there, so please remember guys, these are not recommendations, just what I own and the rules that I follow. So please do your own research. Alright, so since inception, we have a pure capital gain of negative 1.59%. The portfolio still has a dividend return of 4.74%. This gives us an overall return of a positive 3.16%. See your record last week? I'm only really concerned of Aurelia with their massive drop recently. Now they're flirting with our Rule 1 10% stop loss. Let's see how they play out next week. Alright, today's nugget section is going to be on one of our fave bombs, being Capral. ASX ticker, CAA. We'll do a deep dive and we'll do the normal thing. We'll have an overview of the company, the management, some numbers, and of course, some graphs. So let's start with the overview. Who is Capral? So basically in a nutshell, Capral is Australia's largest manufacturer and distributor of aluminium profiles. They commenced operations back in 1936 and listed on the ASX 50 years later in 1986. I have actually been quite interested of recent, the listed date of companies, and I'll start including these moving forward. So that's 86 years as a company and 36 years being public. They have 9 operating presses with a nameplate capacity of 74,000 tonnes. FYI, in financial year 21, they actually did 76,300 tonnes, so good on them. And with their 900 plus employees, they serve fabricators and distributors like myself that cater for a diverse range of critical industries from detached residential housing to high-rise commercial construction, even marine aviation, defense, transport, and general engineering industries. Now I do love this company as they are continually investing in my game, which is CNC machinery and implementing more robotics. Alright, I'll start with the overview. Let's move on to the management. Alright, let's start with Tony. Come on up, Big Tone. So Tony has been with Capral since Jan 2013 and he became the MD and CEO in April of that year. He has been in these type of positions for many years. For example, he has been the MD of the Wattle Group, CEO of the GWA Bathroom and Fittings, MD of the Red Paper Group, and GM of Tasman Insulation. It's great to see so much experience under the head of the company. And to think he'll hit 10 years just next year. He also has the BCom under his belt in accounting and business management. Tony has a modest stake of 2.58% of the company, valued at 4.2 million. Good to see some skin in the game. Keep up the good work, mate. And I just added you on LinkedIn, by the way. Next up, we'll do a very experienced chairman. Come on up, Rex. Sorry, but no photo, as it seems like he's a little bit shy on the internet. So Mr. Woodward has over 45 years of, prepare for the mouthful, international experience in GM roles, mergers and acquisitions, corporate strategy and structuring in manufacturing and distribution. He has been a director of over 10 publicly traded companies in Aussie, UK and South Africa. Good to have also this much experience at the head of the chair as a non-exec chairman. Unfortunately, Mr. Rex has no stake in the company at this time of recording. Okay, it's numbers time, baby. Today, let's just play with the old P&L on an annualized basis. It's a real mixed bag, so let's just dive in and have some fun. So top line operating revenue. Great to see from 12 to 18, it was increasing nicely, but then 19 took a hit, it recovered to 17 levels in 20 and boomed in 21. From a holistic view and some of my readings, my assumption is the pandemic hurt their numbers when it first happened, like most of the ASX. But with all the stimulus in the building industry and constraints on imports, it really fast-tracked their recovery with record sales in FY21. Okay, let's bounce down to their NPAT. Look at December 12th, starting with a near 11 million loss. Ouch. But what the heck? 51 mil loss in 13? That's not normal. So we check out the abnormals and there was 41.5 million impairment of non-current assets. We should probably check what that was all about. But from there, we had a 2.6 million profit, but boom, negative 2.5 million in 15. Again, a hit in abnormals. Looks like maybe they closed some plants down and took a hint in inventory write-offs. Again, we should check that out, but back on the road for now. Nice profit from 16 to 18, but then came along abnormals again. This account gets a hammering on these books. 22.2 million in more restructuring costs. A big 16 million in rent offset. Maybe they had to shut a building down and still pay out the lease. Who knows? We'd have to go back and have a look. I started looking into the AASB 16, but it was a 117 page standard and I've got beer to drink, so I moved on. The years we most care about, 20 was a huge 25 mil profit and 21 a whopping 42 million with no abnormals. But some great key investments from what I read. They were opening plants, but let's just hope we don't see a repeat of the same closures in the future. Alright, now let's jump into some graphs. 5-year monthly to start. First, look, I take my hat off to anybody that got in down here at around $2.50. It is almost a 3 times gain in 2 years. Remarkable, nonetheless. You can see our buy price is up here at $7.90, and I won't lie, I'm a little bit chuffed on the entry point looking at the 5-year monthly. With that Everest that went up shortly after. A real one is set here at 7.11 for our exit, which we should hopefully never have to worry about, unless the business hits some bad headwinds again. Now I'll show you something that is crazy. Let's scroll out to a chart from back when it listed. They used to trade at 900 bucks a share. That's 100 times what it is now. I'm not 100% on this company, but I know they had a series of demergers and acquisitions to become what they are now. But I would love to know the full story on this one. You can't even see our little peaks when you see the full picture. Imagine if we got back up to a 900 bucks a share. Oh my golly. Okay, I'm all charted out. Let's move on and we'll dream about this later. Alright, so our cash account is now at $19.03. So with our $19.03 in cash plus our $86,379 in stocks, takes us to an overall value of $88,282. Which is about, oh my god, this is gonna hurt, a negative whopping 4.97% total portfolio loss from last week. Silly market times. Well, I hope you got through your beer and you enjoyed that episode. Tune in next fortnight for more not financial advice, and you all know the saying, keep healthy and wealthy. See you guys, enjoy.